We'll directly dive into the first topic. We'll ease in of today. We start from your point of view, from the investor's point of view, with the topic of venture capital in Web3. I welcome to stage Ivan, Amos, Matthias. Maybe you sit, you in the middle. Amos, Ivan, perfect, yeah. Perfect. Actually don't need this anymore. Great to have you.
Thank you.
Great
Thanks.
that you made the travel. None of these individuals are based in Frankfurt and made their trip here. So great to have you. Amos, maybe I'll start with you. Amos is the co-founder of Node Capital. You're from Tel Aviv originally, right?
Yeah.
And investor and pioneer in the crypto landscape and digital asset sphere. He co-founded Colored Coins in 2012 on Bitcoin, if I remember, and built Kolu, building the first digital asset platform back in 2014. Prior to that, Amos was heading trading at eToro and different key positions in other investment firms. So great to have you.
Thank you.
Matthias, you got into the crypto space in 2016 and joined Maven 11 in 2017 as an analyst, and you brought your background is more in economics, but you have took the entire sphere, now are a general partner at Maven 11, and you made amazing investments in companies like Celestia, which has been I would say at least a fund returner for you. And Ivan, you are the blockchain and crypto lead at BPA France, the French state fund. You have done incredible things for the French ecosystem, which is actually the reason why also we opened up an office in France, because it has become the most interesting and dynamic ecosystem in Europe. You have you work for the French Public Bank, and also you have a lot of interest in the macroeconomic landscape and blockchain initiatives in France and Europe. So maybe let me start first of all with the question, what verticals are you focused on, and kind of what is your personal investment thesis when you look at Web3? Maybe you start, Amos.
Yeah, I think although we hear the word, Web3 for a very, very long time in our industry, and been there for a long time, I think there are a lot of areas that we're still early on. And for us, it's usually we look for things that create a new infrastructure that enable new type of use cases and new innovation curves in our space. So anything that will allow things that were not possible before for any type of use cases you can think of on the infrastructure layer is something that we're excited about.
Amazing.
Yeah, for us, we've historically been quite infrastructure focused as a fund. You mentioned that in your earlier talk, right? That like scalability was an issue and that's now solved. Broadly agree with that. However, as you solve scalability, new sort of infrastructure challenges arise. So we've seen a lot of these layer ones, so different blockchains with different communities pop up. These need to talk to each other, and then you have an interoperability infrastructure challenge. So we continue to focus on these infrastructure issues that sort of pop up as the space matures. In addition, one area we focus on quite a lot is the issuance of real-world assets. I think stablecoins are the prime example of this. Circle holds dollars in their bank account, issues USD stablecoins on Ethereum, Solana, whatever. It's quite remarkable that Circle is the most profitable entity in that equation and not the people using the stablecoins. So we do think there's an area as you mature as a market where a lot of new type of assets will come on chain. The Biddle Fund by BlackRock, which it does like bond issuance on chain. You can see equities going on chain, Tesla shares, whatever you want. And we just expect more and more of that over the next decade or so. And then finally, and this is more personal interest of mine, is I think privacy. I don't think it's sort of sustainable at all to have all your payment history visible to everybody. Just think of salary payments on chain, for instance. So I think privacy enhancing technology is something I'm very interested in.
If you look at the French ecosystem, how is it evolving? Where was it a few years ago, and also France from BPI? What is your thesis on the future within Web3?
So we're pretty lucky because we are not. We don't have as much pressure as you guys because we're LPs, and we are a long-term investor. So we work with 220 narratives in this space. You have digital identity, you have decentralized infrastructure, you have real-world assets. And the great news is that all these narratives have great potential. We don't know which narrative will blow up, otherwise we would do prop trading. But we rely on great GPs to choose these narratives. On a more personal views of the state, digital identity is key, because now with AI, you don't know what's true and what's fake. And for the states that need to defend democracy, that need to defend access to fair and true information, this is the biggest challenge for the next years.
Yeah, it's, if I remember first traveling to France a few years ago, the ecosystem wasn't that large. So you really pushed a lot forward. How did the commitment come, and how are you committed for the future in this space as a French state, for example?
Yes, so normally French people tend to focus too much on France, but I'm happy to have this question. We have deployed 150 million dedicated to this space. We would like more commitment to other institutions. We think the KfW has really a role to play, the European Investment Fund too. We're lucky, we have a pretty dynamic ecosystem. We have 1,200 startups in this field, and it's still growing. And we expect to invest more, but also to get more banks, more corporates implied, and that requires capital and energy. So you think, just a follow-up question there, so you think that even as a state fund, you have to expand your horizon beyond France? Yes, because it's a decentralized ecosystem. The local approach of this ecosystem has some limits. Of course, you need a community, you need a place to feel kind of a safe place. And every crypto community locally have great qualities. But at the end, it's a decentralized play. It's the evaluation of finance. And this is why you need to think global at some point, even if you have your safe place, which would be Europe first for us. Yeah. One topic which is probably a dominant topic when LPs first approach this area is, there's one cryptocurrency, why are there so many? Why do we need token? What different investment topics are there between equity and token? How is the venture approach in this field? And why is token a new and important investment sphere in this space? Amos?
Yeah, so this is a very big subject, right? And it's also very confusing because usually investors will enter the space through Bitcoin, which, both for them is a little bit complex to really understand how it works in the beginning, but also the value that it provides. It's not about like all of the tokens that we're talking now and the applications, right? So usually people use Bitcoin as kind of like a store of value. We see states starting to adopt it, and just Pennsylvania announced that it wants to buy like $200 million of Bitcoins. So all of the things that we see on the news on Bitcoin already like very, very confusing. And in our space, you have companies who are service providers, right? And building like validation cloud that you mentioned, and other service providers in the space, where this is an equity deal as a GP. And then we have token networks, right? And token networks are solving usually specific problems, or can also be very generic, like an UL1. So all of this is very, very I guess confusing, right? Because you have in token networks, you have all of those generic networks that are trying to solve problems like scalability, privacy, different things like that. And then you have, networks who are trying to solve specific problems like interoperability, right? Like XLR or any other blockchain that solves specific problem. As a venture fund, for us, we usually focus on decentralization, and that's token networks. But we also started to look into different service companies. Another service company that from Tel Aviv and is Fireblocks, for example, that a lot of the VCs, GP works with. It's pretty big. So you have, it's very, very confusing to understand. But for us, we mostly focus on tokens and companies who are optimizing for the token value as compared to the equity value.
Yeah, I think we're on the same page as you. I think we believe 90% of our portfolio will be a token investment, even though you also get equity exposure, just to make sure that...
Maybe just to clarify, if you mean token investment, is it liquid or are you entering early?
No, you invest pre-seed, seed stage, so think 2-3 people have an idea. The earlier the better, I would say, for us. But then ultimately the return will come when a token is issued. I think what a lot of people view wrongly in this space is that they look at like cash flow and revenue numbers as if they're evaluating a business that has a token that represents a share. I don't think that's true at all. I see tokens more as mediums of exchange and indeed currencies, but not in the way that we use Bitcoin to pay for coffee, but more internet native. So the way I got into crypto was back in 2014. I was buying and selling in-game currencies, think World of Warcraft gold, these type of things. I got paid in Bitcoin and Ether. It's not up to me to say that these are not currencies because I can't buy my coffee with it. It's just a certain internet community is willing to accept it as a means of exchange. And I think the bigger these networks become and the more widely accepted the currencies or tokens behind them become, the more valuable they're going to be, regardless of profit, revenue, and whatnot. I think that's sort of fitting a Web3 protocol in a Web2 sort of financial analysis way. And I think also historically in this space that hasn't really worked out. Like the best investments are token investments, and they don't need to make sense from a revenue perspective.
Can I have one more? I think there is another perspective that usually LPs they're now maybe starting to kind of like understand the advantage of running a fund that also invests in token, the liquidity. Like usually when you invest in a fund, the duration is so long, right? Like you're waiting for an IPO, you're waiting for an exit, and tokens are way more liquid, which enables a great return like you presented. If you're doing well, you can return the funds very, very fast. Basically, any company is doing an IPO. It could be not successful, not enough liquidity maybe, but there is also not like 0-1. Right? It's like it's not a company that's closed or super successful. You have even things in the middle if you have liquidity. So this is very unique for a space.
Yeah, I think this is also the downside of a token for founders and employees at these companies. It is sort of like putting a price sticker on your startup. And it can obviously be very stressful, etc. You constantly have a feedback of like, hey, the token is doing well, it's not doing well. And some people mistake that for the company or the project is doing well or not doing well, whereas these can be very misrepresented. I would maybe say that Solana was a great example of that.
It gives a lot of transparency for the LPs of a venture fund as well, which can be positive or negative, right? But at least you see the NAV of the fund at all times. It must have been, I remember first discussions back in 2018 with the European Commission, explaining them why they should also consider a token. And BPI has been, I would say, the only state fund I know which on purpose is only investing in funds which has an equity component and token component. How did you convince the state to go down that road?
So first, luckily, we had a national law and a work from the French regulator defining what a token was. So it was the first definitions of utility tokens, like you needed this token to access a service or a network. So it really helped because then it was defined. There was a taxonomy. And then the MiCA ruling, market in crypto assets, the European ruling, kind of updated this taxonomy. So first we were talking about something that was existing in terms of law. And then we were observing value accrual linked to these tokens. And it was a great experimentation to see that in some terms, equity can be queen if you have M&A, for example. But for some other projects, token is really king because all the value accrues in the token. And this is great also for us because this gives us a snapshot of the future. Everybody knows, as you mentioned, that private equity is long-term and that you need liquidity. Everybody is working on GP-led secondaries in private equity and stuff. The token is kind of a fast-forward of this world. So for us, it's super interesting to experiment and to see how it works because I think this will be the liquidity of tomorrow. Private equity is too long. We need to get more liquidity. And the second thing that is great, it's sometimes you're stuck with local investments, especially for state fund. Local token is a broader definition. It's decentralized. The team can be French, but they did the token issuance in Switzerland. And we invested in such projects because we think that at the end, it's a Frenchy token, as we say. But this is great because this is also something you need to, as an investor, is to get the most broader deal flow to do the best deals. So two good reasons to do tokens.
Yeah, a question VCs or investors always love is the anti-portfolio. So what would you say is your anti-portfolio, Amos? And but especially now everything is hyped, right? We're on top of the market and we're seeing a bull market in front of us. But what have been the learnings so far? And now looking at the market and the future, what learnings would you transport and do differently in the future potentially?
Yeah, so it's funny, we were at dinner yesterday and I was also shared, like, I think my biggest mistake. So my personal biggest mistake is that in 2012, when I was working on Bitcoin and building colored coins, which quickly it's a layer on top of Bitcoin that enabled the issuance of digital assets, was the first time that you could actually issue digital assets on a blockchain, which was only Bitcoin. People called it Bitcoin 2.0 back then. So my idea back then was that the only blockchain is going to be Bitcoin, and we just need to build different technologies on top of that, and that will be basically the global blockchain for everything. And back then I worked with that on Vitalik, who afterwards built Ethereum. And for me, when Vitalik went to build Ethereum, I was like very skeptic about it. I was like, why do we need another blockchain? Like, you know, we just need to fix some stuff in Bitcoin and that will work. And I obviously I was wrong. And I took this learning, and I think this thing happened to me along the way a couple of times, feeling that you know, we have like big players and there is no space for new competitors in the market. And this is what I felt about Bitcoin. I was wrong. Along the way, it happened to me with investments in early exchanges. Like, you know, I thought that, you know, Coinbase is going to be the only exchange. And then you had like Binance and you had like this new generation of exchanges. But then I think I kind of like learned that because I'm in this space 24/7 for so much time, sometimes it feels to me that, you know, we're already there, but we're so early. So I applied that, for example, in staking. We had Lido, you know, liquid staking was very, very big, but we made our seed investment into EtherFi, which today is one of the biggest liquid staking providers. So I think, this is like my big learning. And with this, you know, same mistake, I miss Sui, I miss Solana, right? Like, because I was always like, fell in love in something I felt that this is it's a winner, and that's it. There is no space for other competitors, but it's something that I'm kind of like fixing in the past years. So.
How about you, Mathis?
Yeah, I think also for me, exchanges, but then the decentralized version. So Balancer seed round, I think, was at like 10 million. So very quickly, Uniswap is like a pair trading, similar to a centralized exchange, ETH, USDC. Balancer allows you to create these pools, but then with multiple assets. So think ETH, USDC, and Bitcoin. And I saw it and I was like, no way. Users are going to find this way too complex. They're never going to be able to wrap their head around this. I think it ended up trading at the peak of like 8 billion. So that's an 800x that we missed out on. I would say that's probably the biggest miss. And it's also in the exchange field, but then the decentralized version of it.
And in terms of learnings of the cycles, is there something you would do differently?
Nah, we've always been, I sometimes joke, like we're more human resource than technology, right? Just back great founders who are capable of doing things you yourself can't. And then generally you're going to be all right. I think the only thing to look for is that founders stick around throughout cycles. Like at peak 2021, you could just see all the executives leaving Facebook, Amazon, etc. to start crypto companies. I generally think these are people to stay away from. As they come in when it's hot, they also leave when it gets cold, and the winter sort of comes in crypto land. So we tend to look for people who especially join the industry in a bear market, when things are just depressing and it's hard to get funding, because these are also the people who will continue to build no matter what happens. And I think that's a pretty important thing.
Good point. Ivan, for you, you've seen a lot of deals you probably would have liked to invest in, but...
So the first very anti-portfolio is Kaiko. Ambre is in the room. We had access to a good deal for the seed round at 1 million, and we missed it. I don't know how we did it, but we did miss it. So that's a very big mistake. And we did a lot of grants to some projects. And for Morpho, when there were still students, we did, it was a 50,000 euro grant. And now we just invested into the token round, and then calculated that with the grant, we would have made something like 10 times more token, and it would be liquid now. But that was the play of sustaining a project. So I don't want to make these calculations anymore with tokens.
It was quite interesting. I recently started to read a book from Mike Maples called Pattern Breakers, where he talks about inflection points and trying to go back in time to identify what founders actually make that spark and that difference. Where do you think the inflection points will come from in the future, and where will kind of the next pattern breakers emerge? What verticals are you looking at?
I mean, of course, we look at finance. I mean, decentralized finance was a big hit. To see that youngsters in their student rooms were issuing tokens, were their own central banks, and were doing great experimentations, and some stuff that were working. And of course, a central bank cannot do such experimentation because it's more risky. And for us, it was really an inflection point. And I'm very bullish of this next generation, especially as a bank. When you work in a bank, your IT systems are bleeding every day. Every banker knows this. And when you have the opportunity to replace this infrastructure with a more efficient and more shared layer, we are really, really enthusiastic about this. So yes, DeFi is really something big.
Yeah, I'll take a little bit more the crypto anarchist answer there. I think the next inflection point, and it's probably still 5 years out, is when we start cutting out banks and BlackRock, etc. entirely, right? That's ultimately what crypto should be about. Maybe even venture capital formation. I think in my ideal crypto future, we as a fund are no longer needed to fund early stage projects, but it just happens on chain by people who want to invest directly, as you cut out the middleman. I think especially for banks, finance, it's all extremely inefficient. And I just see a future where we no longer have PayPal issuing a stablecoin as an intermediary still, but we just remove the intermediary entirely, and there's just stablecoins on chain that people use. And I think that's more the sort of future I hope we get to, also acknowledging that can easily take 5-10 years, if not more.
Yeah, I can very well connect to both of that. I think that one important thing is to bring more Web2 entrepreneurs into the space. You have these amazing entrepreneurs already exited companies, etc., and we don't have enough of that talent. And in order to fix a few interesting things like privacy, we do need those entrepreneurs. I think that privacy you mentioned is a very big area. I think reward our assets and bring all of these assets on chain won't happen until we solve that. And you have amazing technologies like fully homomorphic encryption and ZK that are happening right now. And right now, yeah, it's a process of years, but it is happening. So I'm very, very bullish on that.
Maybe to tag on to that, I think bringing Web2 people into Web3 is also a big unlock. That's something we maybe skipped over a little bit, but it's pretty insane that when I ask my parents to hey, maybe use a crypto product, they need to write down 24 words, otherwise they can lose all the assets, etc. I think just the onboarding flow of a wallet, etc., is extremely bad in crypto, and that's probably also a big inflection point, that we remove that barrier, so people can just go to a crypto app as if they're going to Instagram, Facebook, whatever you use these days, and just start using the app without having to sort of preserve your wealth forever by 24 words, buy something on Coinbase, transfer it to your wallet. It's a pretty horrendous flow, to be honest.
And I think we were seeing a lot of hype around AI globally as well in the recent time. To what extent do you believe that there will be an intersection between AI and crypto or blockchain? Where do you think there is an advantage or innovation coming from?
Yeah, so the answer is definitely yes. I think that any new industry, any new area, in our space, there is a lot of noise and a lot of things that people are trying to do, but you can actually do much better in a centralized way. This has always happened when you have new vertical. You have all these ideas that in the end you look at it and you're saying, yes, you can do it, but it will be faster, cheaper, centralized. There is no way, no need to decentralize this piece. But there are some areas, we have one investment in AI and crypto called GenLayer, which basically using AI to connect between the off-chain and the on-chain. There is now a big disconnection between things that are open, that are happening on-chain and off-chain, and they're connecting that through basically consensus of different AI models into a blockchain, which is very interesting because then you can do very interesting use cases like prediction market on anything or insurance and a lot of things that it unlocks through that technology. So yeah, many areas that are interesting, but also so much noise.
Yeah, I would broadly agree with the noise, of course. And I think this is also the moment when the VCs start naming their own portfolio companies. I roughly view AI in 3 sort of categories. I think one is the sort of AI infrastructure stack. So I think training a model, running inference on it, and then running the model. I think here crypto networks can add value by allowing people to share compute resources. One investment we have there is Jensen. They allow us to share compute and train an AI model together. Their thesis was there's never enough compute in the world to train all these future AI models, so we have to enable all the compute that's out there to be used to train these models. Then I think a second category is what you mentioned earlier, right? The verification. I think AI makes it so much easier to just spit out a ton of data, which is seemingly real, but is just fake and AI generated. I can probably go to ChatGPT and be like, hey, can you create 100 newspapers for today as if they're real? And then it does add value if you can verify on-chain which one is the actual real one. And I think blockchains are amazing for that because they are just timestamping for digital things. So if you can just timestamp like, hey, this is the newspaper of today, this is the real one, then you solve the problem of endless fake ones being minted. And then finally, the AI on-chain agents, right? Like AI models just interacting on-chain. This is something that we've seen take off massively lately. but just you give any AI protocol or whatever a wallet, basically, and they start paying for stuff on-chain, taking out goods. It can also go wrong heavily, but that's true of everything in AI. But I do think that's very interesting.
And you have Coinbase and Stripe entering that space now.
Yes.
So
Ivan, how about?
Yeah, same. We are really monitoring AI agents, especially in Asia, because culturally they are more keen to trust an AI agent. There's even companies now where, as a human, you can work for an AI agent, and you are paid with the wallet of this AI agent. I think the European regulator doesn't like this, but it's the reality. You have to be conscious of this, so you have to monitor this and maybe to be part of it. And yes, classic thing, but like we have to verify information, and now the only technology that allows this is blockchain. It's not perfect, but the example we tend to take is that if I want to change the date of French Revolution, I need to tell every teacher that's it's not this date, it's another one. I need to get every book from every library. So it's too massive work. So that's why we really think blockchain is the solution. And we will see a lot, I think, of law cases against OpenAI and AI agents. And they would need blockchain to prove that they didn't take wrong information, or they didn't take wrong IPs from the New York Times. So I think AI and blockchain are linked somehow.
Perfect. Thanks a lot.